Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Ingenia Communities Group to discuss its FY16 results is Managing Director and CEO Simon Owen. Simon, welcome back.
It's great to be here, Carolyn.
Now, you've just released your full year results for FY2016. What were the highlights?
Yeah, we reported a very strong set of financial results. So our profit from underlying operations was up around 20% to $20.2 million. Our operating cash flow was very strong, up around 130% to $21 million. Our statutory profit was down slightly due to the runoff of some tax benefits, but that was $24 million. And I think most pleasingly, our distribution was up around 15% to 9.3 cents per security. So overall, a very strong financial result.
Simon, now to the portfolio. How did it perform?
Yeah, across the 66 communities that Ingenia now owns and operates in 3 different segments, the overall portfolio performance was very good. In our Garden Villages business, which is Australia's largest seniors rental business, occupancy was steady for the year and closed out at 91.7%. One of the most pleasing parts of that business now is that we're collecting about $500,000 in rent every week, and most of that's underpinned by the pension and Commonwealth rent assistance. Our Ingenia Lifestyle and Holidays business is performing very strongly. What we're seeing now in a low Australian dollar environment and where families are taking a lot more shorter but more frequent holidays is that's really underpinning demand for the holidays part of our business. And we also achieved a record sales outcome in our lifestyle business. So we settled 107 homes for the year, which is up over 100% on what we achieved in last year's record result. So operationally, the business is performing very well.
And what progress are you making with acquisitions following your capital raising?
Yeah, so in June we raised $60 million through a heavily oversubscribed placement. That was to underpin 4 acquisitions, and the largest of those was in Western Sydney, the last family-owned institutional grade caravan park. We're well advanced on that Sydney acquisition, and I would expect in the coming weeks we'll be in a position to announce that. Of the other 3 transactions, one of those down Lake Bermagui on the New South Wales south coast, we settled 2 weeks ago. And then the other 2, one in Fraser Coast, Hervey Bay in Queensland, we're well advanced, and I'd expect an announcement on that very shortly. And the other one on the New South Wales mid-north coast is progressing very well. So all in all, we're well advanced. On top of that, we also have another 3 properties that are either under conditional contract or under option. So our acquisition deal flow looks very strong.
So in this ultra-low interest rate environment, what yields are you buying properties on?
Yeah, there's 2 different types of properties we're buying at the moment. Those with existing yields, we're looking at an ingoing yield of around the 8 to 9%. And then we've also started moving into acquiring greenfields development sites to develop brand new communities, and those don't generate any income on day one, but we're typically looking at an unlevered internal rate of return of around 25%. So very profitable projects, but a little bit of capital's got to go in the short term before the profits start to come out.
And now to a more general question, Simon. As seniors accommodation is clearly changing as your business model demonstrates. So what do people like most about your lifestyle parks?
Yeah, there's probably 3 things that attract residents into our communities. I think firstly, it's the sense of community. So our villages have great community centres, lots of activities and lots of things for our residents to do. Secondly, it's security. So not only physical security, most of our communities are gated, but it's also the financial security that our communities offer. And then lastly, I think most retiring seniors tend to own their homes, and so what our communities offer is the ability for seniors to downsize into a smaller home, put a couple of $100,000 into the bank to fund a more enjoyable retirement. But they're also getting a brand new home, so they're the key drivers for people moving into our communities. And I think we've got a great 20 years ahead of us with the ageing of the population.
And finally, Simon, what's your outlook for FY17?
The outlook is continuing growth, so we're forecasting significant uplift in sales in our lifestyle business. We see there's great opportunities for us to grow revenue in our Garden Villages business, and we're going to expand into undertaking some new greenfields developments in Sydney and Queensland and the mid-north coast of New South Wales. So continuing growth, we're going to continue to acquire more businesses and hopefully meaningfully grow our profits and distribution.
Simon Owen, thanks for the update.
Thanks very much.